Now, South Africa's local currency bonds have outperformed in emerging markets. The performance comes after the government reduced the size of its weekly debt sale, which spurred investor demand. Fixed income trader at RMB, Michelle Wohlberg, joins us now for greater insight in the SA bonds space. Michelle, thanks so much for joining us today. Now, I want to start off with yesterday's auction. Just take us through the activity that played out there yesterday.
Thanks so much for having me on the call. We had a very constructive day yesterday with the bond auction. Started off the week with a little bit of bond weakness because US treasuries were quite a bit higher. And then given the sell-off, yesterday's bond auction actually went really, really well. We had a total of 13 billion bids, which is up from last week's 9 billion bids. And all bonds cleared through through market mids. So the price action that we saw post the auction was also really constructive. You know, when there's demand and people can see proof of that demand, you generally start seeing quite constructive trading. We've also started seeing foreign clients dip their toes back into South Africa. So for the last 2 or 3 days, we've seen them as net buyers on the day, which has also been positive. But unfortunately today, we saw a little bit of that risk on move unwind.
Now, initially, Michelle, in the beginning of the year, as you mentioned, we saw demand kind of waning, but we are seeing an uptick at the moment. Would you say the tide is turning, or there are still a lot of risks at play, including the inflation print we just got today?
Yeah, so I think there's still quite a few events at play that have put a little bit of cautiousness when it comes to investing in SAGBs. Obviously, the biggest macro driver is what's happening in the US and, you know, how the Fed looks in terms of, you know, whether they'll be cutting interest rates sooner rather than later. So that's driving the interest rate market and the volatility there. But I mean, locally, we've also got a huge election risk premium that's been built into the local currency bonds. So, you know, we've seen the back-end bonds trade at quite high levels. I mean, you could buy back-end bonds at above 13% at some stages. So, you know, even though there is value, we haven't really seen investors pile into SAGBs just yet because of all this uncertainty in the market. So, you know, the moment we get a strong, like a US strong inflation print, where it shows that inflation's higher, that starts pushing out interest rate cuts in the near term. So, you know, where we were pricing in 6 interest rate cuts, you know, somewhere through the mid of May for this year, so 6 interest rate cuts for this year, we've now priced it down to 3. And potentially we're only going to do 2. So if you have a look at the interest rate cycle for South Africa, if you have a look at the FRA market, we've actually decided, you know, for the rest of the year, the FRA market's indicating that there actually won't be any interest rate cuts this year based on the current set of information that we have.
Definitely. I mean, when you look at that sticky inflation we're seeing in the US, that strong labor market, that strong GDP, those hopes are really, really just diminishing. And I'm really sad because I was crossing fingers, toes, everything, hoping that consumers will see some sort of relief this year. Now, Michelle, this is the second bond auction since a new rule took effect at the beginning of the month, where there's a reduction in the amount of competitive fixed rate debt that's being sold weekly. How does this rule actually work? And is the uptake mainly due to this new rule?
I don't think the increase in demand has been because of the reduction in issuance. I mean, last week we actually saw one of the poorest auctions we've seen for a while. It's only 9 billion bids coming in for the auction. But, you know, so National Treasury has reduced the weekly issuance by 150 million on a weekly basis. But what they have done is they've increased the non-competitive option from 50% to 75%. So what this means is that if you participated in Tuesday's auction, 48 hours after the auction, you could have the potential of buying the same. You used to be able to buy 50% of those bonds at the clearing level. Now it's 75% of bonds at the clearing level, if it's in the money. which actually increases the amount of weekly issuance on a weekly basis if these non-comps were to be exercised. So I think it's going to be interesting to watch the next few auctions to see how the price action post a Tuesday auction plays out. You know, in theory, because you've got more non-comps coming into the market, even a strong auction will be followed by a sell-off because people are trying to crystallize their non-comp options. Last week, obviously, we didn't see that. We saw bonds perform really, really well. But this week, for instance, it might be because of the polls that we got earlier today, alternatively the US inflation numbers resulting in bonds ticking up higher. So this week, for instance, we probably won't be seeing those non-comp options exercised, and so that those extra billions of cash won't be coming in through to the financial markets.
Michelle, unfortunately, we have to leave it there. Thanks so much for that quick bond update. That was fixed income trader at RMB, Michelle Wohlberg.